Okay, now we can get going. I'm sorry about that. So we are going to talk about software enhancements, new and updated 1040 forms, new and updated business forms. Starting with the multi-factor authentication. One second, it says somebody's waiting in the lobby, but there is no lobby, guys. Hang on. So the IRS required us to offer you two-step authentication. Most of you will just uncheck this box on the multi-factor authentication the first time it comes up and just hit OK. If you choose to use it, you can. If you ever need to edit those preferences, that's under utilities and user preferences. So what the multi-factor authentication does is gives you a code from an authenticator app to be able to log into the software. So you put in your user ID, you put in your password, and then you get a code from the app. Again, it's completely optional. You are not required to do it. So if you do it, when you first set it up, you hit OK on that first screen here where it talks about opting into multi-factor authentication. Then it's going to pop up a window that's got a QR code or barcode on it. All you do is scan the barcode with your authenticator app, whether you use Google Authenticator, Microsoft Authenticator, LastPass. There's about 1 million of these things out there. And then you'll need that app so that you can get a code every time you need to log into the software. For those of you that do use interview mode, which I know is not very many people, we made the interview mode a little easier to complete the entire return into one area. We've also expanded the state section so that you have more options and more availability in the interview mode. So the invoice fees are easier to understand. We redesigned the invoice to break down the fees into 3 sections. Hopefully this will make it easier for you guys to understand for those of you that are using the invoice. There's a section for fees related to tax preparation services. There are fees related to software and transmitting services, and then itemized billing. So and here's where you can see that. Fees related to tax preparation services, by and large part, these are going to be your fees, with the exception of maybe the remote signature fee. Second section is going to have the transmission fee, the transmitter fee, technology fee, e-file fee. If you have one, you guys typically don't with from the developer end. That's what that electronic filing fee is for the developer end. Service bureau fee, bank fees, and then any additional products and services. We have improved the wallet integration. So the transmit queue now displays what will be charged to the wallet. So remember, for those of you that are using remote signature, there is a fee per signature with remote signature. But it's $5 per signature. It has been that way since last year. So you do need to make sure that you set up the wallet if you intend on using that or doing business returns, corporate returns. But it will show you on this screen whether or not, how much is being charged, and then whether or not you have enough actually in the wallet to handle that. We have integrated PayJunction. PayJunction is a credit merchant service, credit card processor. If you're interested in that, you just go to payjunction.com and get more information. Okay, it can be directly integrated into the software under the registration tab in Setup Office Setup. You would just enter your login and password for PayJunction at the bottom. Essentially, what PayJunction does is they'll process your credit card purchases, which you can actually do directly through the software if that's something you set up. For the record, I don't know anyone who has done that this year. So a couple of new forms, and I have them in this particular section of the training because they're not tax law updates that are going to affect most of you guys. But they are new forms, and you might need to know that those forms exist. So the 8911, this form is used to figure any credit for alternative fuel credit, vehicle refueling property placed in service during the tax year. 8990, it's business interest expense a taxpayer can deduct, and the amount to carry forward to the next year. Income and details checklist is there. Displays and prints that the taxpayer receives a tax advance. So you will see that form added. Schedule 1 and Schedule 2 and Schedule 3 have all been expanded. We went from the 1040 being 2 pages and a couple of worksheets to now the 1040 is going to be anywhere from 2 to 8 pages. Schedule 1, 2, and 3 are now broken up into 2 pages. So we'll look at those when we actually get inside the software, and I'll kind of show you some of the changes that were made on those forms. Schedule C, 2106, and the minister worksheet, meals are now 100% deductible in some cases. You do want to check the tax law to be sure. The EF payment form has been expanded to allow EF payment transitions, so direct debit on the amended returns. So now you can make an EF payment with amended returns. The expansion on the 1099 miscellaneous, which is almost an unused form at this point. It's been expanded and now includes box 11 for fish bought for resale. So that's fun, I guess, if we're selling fish. EIC checklist. We're going to talk about this specifically, but the age requirements to qualify for EIC have been updated. And I will get into that when we get into the tax law updates in the next presentation. The 2441 has been updated. We will get, again, I will get into the specifics of this in the tax law. Same thing with the Schedule 8812. That's been expanded. That used to be 1 page. Now it's like 3 pages. So I'll show you guys inside the software, as well as we're going to talk about the specifics of the tax law as it relates to the 8812 in the next presentation. Couple of new business forms and worksheets, and really it's just kind of a couple of worksheets. There's now a K2 and a K3. K2 is an extension of Schedule K. It's used to report items of international tax relevance. K3 is an extension of Schedule K1. It's used to report to partners or shareholders their share of the items reported on the K2. So I doubt you'll ever see either one of these forms unless you've got a corporation that's doing international business. Form 7203, it's the S-corp basis worksheet, essentially. The IRS has stripped that out of the worksheets and made it into its own form, the 7203. 8990, which we talked about earlier. That's for business interest expenses that can be deducted in the amount that carries forward to the next year. 8996, this form is used to certify that a corporation or partnership is a qualified opportunity fund. Again, I seriously doubt anyone is going to see any of these forms at all. This presentation will be available. I will make sure that I get a copy of it out to Anna so that she can distribute to you guys. So it is going to be saved in that regard. So let's get to the meat and potatoes of what this presentation, this training really is going to be about, and that's going to be tax law updates for tax year 2021. Okay, there is quite a bit to digest, so we're going to kind of go slow and make sure that we understand this fully. Okay. So what we're going to cover the child tax credit and advanced child tax credit reconciliation. We're going to cover the child and dependent care credit. We're going to talk about actually, you know what, guys, hang on. We're gonna take a step back. we are going to go over the return first.
Kevin, we have a lot of new people, some that have never, that is new to the tax business, never done a tax return. So just FYI, we may have to take a little bit slower than usual.
Okay, that's fine. What I want to do to start with is show you guys what a completed return or mostly completed return looks like, right? Just kind of want to go through a couple of the forms and the things that you guys are going to see in here, a couple of the software features that you guys will utilize in here as well. And then we will start a return from start sort of all the way through to the finish, at least as far as we can go. Transmission is something I can't do, but everything else, for the most part, I can do. So this is the client data sheet inside the software. So once we've edited our return, right, we're looking at it and we're just looking at the components of the return right now, okay? The client data sheet is going to be all of your clients, your taxpayers' pertinent information, their personal contact information, their employment, their occupation rather, phone numbers, email addresses, filing status, things of that nature. Okay, and there's a couple of things that I want to point out in here. One is I encourage everyone to get an email address from the taxpayer if at all possible. It will allow you to do multiple things, including sending their tax return to them via email. The email addresses can be exported and used for email marketing programs, as well as you can request a remote signature via email. For text messaging, you're going to want to make sure that you mark this box if they opt in to receive text messages. Please, I encourage you to make sure that you actually ask your taxpayer. We're in a world where we're used to, or the expectation is that everyone has unlimited e-file or unlimited texting. Some people still don't. There are some of those people out there. In addition to, some people just don't want to get text messages from you. So before you run the risk of alienating a client, you should ask them, if it's okay for them to receive text messages. And then you want to make sure that you put in a cell phone number. And here's where you do that. After you mark that X, we're gonna send you a couple of additional things that lets the taxpayer know these things and stay compliant, and make sure that the text messaging service isn't disabled by carriers. We want to make sure that we do these things. So you do want to make sure that you select the carrier. This will allow the text messages to deliver a lot easier. So you can come to the bottom, and in this blue bar, or gray bar rather, there's a blue link here that says choices, right? So we click choices, and then you can select it from the list. In this case, I'll just do T-Mobile. You can enter preferred contact, preferred languages, as far as contact method, as well as languages. I encourage you that if they give you a driver's license or state issued ID, that you enter that information here. You can pull it to the bank application. So you can't pull it through. If they don't have one of those, that's fine. You can leave it blank and you can move on. This particular return is marked as head of household, so there's no spouse requirements for me to fill out, right? Because I don't have a spouse. Down in here is where you're going to get into the address information. For the most part, the address information is pretty straightforward. There's not a lot to it. If they are going to do a direct deposit of any kind, I would enter the information into this section. Enter the bank name, enter the routing number, account number, and the account type. Okay. Then you can come down and add the dependents in. So that's the dependent section. And then down here at the bottom are a couple of things. Okay. One is enroll in Protection Plus to receive 3 years of audit assistance. If this is not something that they want to do, you just answer the question no, and then you're done. The last 2 questions are related to remote signature. If your taxpayers are going to be signing their documents via email or via text message directly from the software utilizing remote signature, Here's where the questions are. And this is, does the taxpayer consent to receive and sign their documents remotely? Do they want to do this? And then do you want to include the remote signature charge on the invoice to have them pay it? Or do you just want to have it taken out of your prep fees? However you decide to do it is completely okay. All right. We're going to move over here to the document, to the file options. We'll start there. File options will give you a filing options fee comparison. I like this page a lot. It breaks down everything that they could be looking at in terms of advances, all of those things. But what I prefer the most about it is you can print, and if you print current form, we're going to view this in a PDF. They can initial the option that they want and then sign. It's going to be very difficult for them to come back and say that they do not know what the fees were, or no one was ever told what the fees were if they've initialed and signed what option they want. Now your office probably has a procedure for this, so you want to follow them on that. I just want to make sure that everybody's aware that the file options is there. We're going to jump down here to document archive. So document archive is our paperless office solution. Okay, document archives allows you to scan using a supported scanner documents directly into the document archive. It does not scan them into the software in terms of, like, if you scan a W-2, it's not going to fill out the W-2 unless that W-2 has a 2D barcode, which sadly a lot of them are not coming with them like they said they were going to. You can import documents. So if someone sends you something via text message, whatever the case is, you can import that into the return. Let me see. Yeah, I got a couple docs here. So you see, I just selected the document from my computer, enter description, enter the type, and my document is now in there. So if I double click, it's going to open over here, and you can see there's the driver's license for my puppy. So pretty simple, not overly complicated in terms of that. So you can open, you can view, those pretty much do the same thing. You can email these documents, which is a feature we got in, I want to say late last year. But in particular, that's the next step. So you can send them a copy of their document. So if you scan their W-2 and they're like, hey, I lost my W-2, can you send me a W-2? You can email it to them. Of course, you can always print anything that comes in here because it's going to open, and then you're able to print it from there. So I want to show you some of the things that we were talking about earlier with just sort of the differences in the schedules. So as you see, this line 8 used to be a grouping of a bunch of different things that had a worksheet with it. Well, now they have split all of those out. Everything that was on that worksheet now has its own individual line, which is why this page is even longer than before. They did the same thing with other adjustments. So that's why these are now 2 pages when they used to be 1. Same thing with Schedule 2. They've expanded out a lot of different things inside of here. And Schedule 3 is in the same boat. Okay. So I just wanted, like I said, I wanted to show you guys a couple of the features inside of here. One of them also is this send text button. You can send text messages directly from inside the return. There's also mass texting that can be done using a report from the work in progress summary. So you do have both options available to you. There's a built-in calculator. You can click on at any point and pull up a nice little calculator. Quick will allow you to look up the status of a return from inside the software at any time. You can just click that quick button, type in their social, type in their last name, and get an update on what the status of the return is. This will save you time when your phone is ringing and you're in the middle of doing a return, so you don't have to close out of the return to find out what the status of that return is. You can just use quick. Notes. So you can create notes on the account. These notes will pop up as soon as you open the return. So if you're missing documents, for example, and you may want to put that in so that if another preparer ends up talking to that taxpayer, when they open the return, there's going to be a message that says, hey, I'm missing the W-2, I'm missing the 1099, I'm missing their ID, whatever it is. You can also use this if they owe you money. That seems to be a very common place that that is done as well.
Kevin, I believe we have a question. The chat box. How do you want us to go about questions, Kevin?
Honestly, if you guys just want to ask,
okay,
I'm totally okay.
Okay, then somebody wrote a question in the chat box. Let me see what it says. It says, where can we do that at? I'm not sure. Angel, can you go ahead and unmute yourself and ask that question? More details?
Yeah.
Okay, so I was asking in regards to quick. I'm trying to look for it on the left-hand side.
It's in the top toolbar. In between send text and payments.
Okay.
Yeah.
Okay, awesome. Thank you.
And Carla, I think Carla was asking, she said she has the software open in another computer. Carla, it's better for you to just watch the video instead of trying to follow along with your, I'm so sorry, my mind. I need coffee with your software. So just follow along. You don't need to try to do what he's doing in your computer. If you have any trouble, we will do a one-on-one later. Okay, we'll call you and do a one-on-one.
Yeah, I would encourage you guys to, just sort of, focus on what it is that we're doing versus trying to follow along. I find that people who are trying to follow along tend to be a little bit more lost or confused when the training is done, and that's never what the intention of training is to do, right? That's never how I want you guys to feel. So what I would say is follow me, watch me, and then on the IND website, there are in the download section, there is documents. There's tutorial documents that you can use that will help you create a new return. You can kind of walks you through step by step the same things that I'm doing, but gives you the instructions so that you can do it at your own pace on your own time. And I will show you guys where those are on the IND support site. Okay.
Hey, Kevin, before you move forward real quick, ¿alguien tiene alguna pregunta en español? Si tienes pregunta, nada más entonces puede quitar el botón de mute y hacer la pregunta en español. Y nosotros le contestamos. Okay. Okay,
so I'm going to come back out to the work in progress summary. So this is where you guys log in. When you first log into the software, this is what you're going to see. It's going to be the work in progress summary. And depending on what your access levels are, you may be able to access some of the things on here and not other things. Okay, and that's completely normal. That's not abnormal. The work in progress summary just gives you an overview of what's going on inside the office, right? This return count gives you a total of returns. This is where you transmit if you are transmitting returns, checks and registers, check register and activation, excuse me, is where you will print your bank checks from, your checks for bank products. Again, if you're doing those things in your office. Up at the top are a couple, there's really two buttons I want to focus on, three. One is add new, and this is how you would create a new return. You click add new, you click add new. Oops, sorry. When you click add new, you'll get a box like this that gives you double entry for the social. They're doing an ITIN application for the taxpayer. You click the W-7 form and it will generate. Okay. Lookup will take you to this lookup screen. You can search using whatever the criteria is set here. Mine is set to last name or SSN, right? Or you can just hit go if it's blank, and it will give you a list of all the returns that exist. or at minimum, all of the returns that you have access to. Okay. The refund calc is an estimator. Okay. So this allows you to kind of go through and estimate with a taxpayer. So they're single, they have children. Okay, so they're probably going to file head of household. So you can kind of click your way next through this. I think I have a pop-up somewhere. Where did it go? Okay. Sorry about that. I had a pop-up box somewhere and there's so much stuff on my screen that it disappeared. I couldn't find it. So give me 1 second. We'll get back in there. Okay, sorry about that. So refund calc gives you the estimator. You can walk yourself through it. It's sort of a step-by-step estimator. So it's pretty simple to do. It's not overly complex at all. All right. So what we're going to do now is we're going to start a new return. We're going to go we're going to click add new. We're going to type in a social. Here's just loading forms. So the first field it takes you to is the taxpayer's date of birth. Then it's going to be the name. All of this information you're going to get from your client, your client's intake form. So we're going to opt in for the text message. We're going to say, yes, we're aware. T-Mobile. We'll get in the ID information. Then we're going to pick our filing status. And in this case, we're going to go ahead and do head of household because that's going to be a pretty common filing status for you. So you see, after I hit filing status and I clicked tab, or I hit the tab key on my keyboard, it bounced me right past all the spouse information because it's not required. Took me down to the next required field, which is the address. All right. So if I hit tab again, it takes me to the apartment number. The second time I hit tab, it takes me down to the zip code. There is a built-in zip code database. So if you type in the zip code, it will populate rather the city and state for you. So you don't have to enter the city and state, you just enter the zip and that takes care of it. Now we're down into the bank account information. I have no idea if this is right. Yeah, I didn't. So that's a blind entry. If you see that again, right? We type it in. And then when we tap off, we get this double entry validation. This is just to make sure that you don't make a mistake. If you got it correct, it will populate. If you don't, it will tell you you got it wrong and to re-enter it. So now we're going to go down to the dependent information. Oops. You select the relationship status after you enter the social, and then the number of months that the dependent lived with the taxpayer. Okay, so we've got everything we need now, except these bottom questions, right? Do we want to enroll in audit protection? No. I'm going to say no on the remote signature because I can't actually send the remote signature in my build because I don't have a credit card on file to pay for it. And I don't want to on these, but I will show you how to send it. I just don't actually want to send it. Okay. So our next step then is going to be adding income to the return, right? So we want to click add form. And here comes the add form box. And by default, we have it set to go to W-2 because that's the most commonly added form to a tax return. So that's what we're going to do. We're going to add a W-2. So we have an EIN database. So if the EIN exists in the database, it will fill that information out, right? If it doesn't exist, it will leave it blank. So then we're going to fill out the W-2 exactly as the W-2 appears, right? We're not going to deviate from it. You have to fill this form out exactly as it appears. Okay, so now we've gotten that. And you see that if I hit this refresh button, now the schedule EIC has added, the EIC checklist is added, the 8812 is added, the paid prepare due diligence, the 8867 has been added as well. So let's say for this particular taxpayer that Bruno's got a side job, right? He's got a side business or he owns his own business, but isn't a corporation, is just a 1099 Schedule C person. So what we want to do is we want to add the Schedule C first. Always add the schedules first because that allows you to be able to report the income on any forms like a 1099 NEC back to the schedule. If you do the 1099 NEC first, then you got to go back, then you got to go create the schedule, then you got to go back to the 1099 NEC. It's not time efficient to do it that way. So always remember schedules, then forms. So we're going to add our Schedule C here. We're going to put in a business name. Or the principal business rather, design work. In this business code box, it's one of the first opportunities we see to use this choices. So you can click choices down in the gray bar, the blue link that says choices. It's going to bring up an entire list of things. Now you can shrink these just by clicking and dragging so that you have a little more room to see. In this case, we're going to do this and we're going to say performing arts companies. That's fine. Okay, then you want to come down and answer any of these questions that matter. I will tell you this, the vast majority of your clients are going to be cash under the accounting method. Again, the rest of these things are going to be just questions that you may need to ask depending on what it is. I'm getting to the meat and potatoes of the return with that kind of bogging you guys down in details, okay? So now we get into the gross receipts and sales. So if they have income that was not reported on a form, right? If they didn't get a 1099 miscellaneous, an NEC, a 1099C, 1099K, anything like that, they got paid cash by their customers for whatever it was that they do. Those are considered gross receipts or sales, and you would enter those manually, combine them all together, and then enter them manually in line one. So in this case, I'm just going to say he had $2,000 in gross receipts, but he also had a 1099 NEC. So what we want to do is if we click in that box, that dark gray box, which any dark gray box is a calculated field. You do not want to type in that box. You want to link to that box. So down here at the bottom, we've got form links. So we want to click form links and we want to pick the 1099 NEC. Right? We're going to come here. We're going to put in, let's say he got 6,500 blocks one. Now we've got to put in the payer's name or the payer's EIN, payer's SSN. It's just a matter of what's on there. So we're going to put in the payer's EIN. We're going to put in a name. And payer's address. Now, underneath the non-employee compensation box, box 1, directly underneath where you type in the amount that is in box 1 on the 1099 NEC, there is a link to box. And this is you're going to tell the software where you want this money, this amount of non-employee compensation to be reported. You have a couple of options under tax law, but I will tell you this, the vast majority of them are probably going to a Schedule C unless someone's got a farm and then it goes to a Schedule F. If you're reporting it directly to the 1040, you want to be very careful how you report that and make sure that you're following the tax law, okay? So down here at the bottom, we're going to click choices again, and you'll see where all my options are. So we're going to select that Schedule C for that design work. We're going to hit OK. Now, if we go back and look at our Schedule C, you'll see that the amount is now there in the 1099 NEC in the income field, right? And it's been added together, or added with, rather, line 1, which gives us the gross income of $8,500. Now we're going to get down into the expenses on the Schedule C. Now, for the most part, the expenses are pretty self-explanatory, and they're just manual entry fields, right? If I've got advertising, I can go type that in. If I've got office expenses, I can go type that in, right? Pretty simple things. There are a couple of places that look manual entry, but you probably want to link them to something else. Line 9, line 13. In particular, those two, as well as line 27A, which is other expenses. And I'll show you where all of these are. We're going to start with the car and truck expenses, which is most often going to be mileage or actual expenses on the vehicle. So if we scroll down and we get down here to part 4, this is the easiest way to add vehicle mileage. We're going to check this box, which says, hey, take the information here and report it back to line 9. We're going to put the date that the vehicle was placed in service. I know there's been some confusion about the date placed in service, but I want to clarify it from the IRS's standpoint. The date the vehicle was placed in service is not 1/1 of the tax year. It is the date that the vehicle was first used for business. So if they first, let's say in 2014, they got this truck to use for business, then the date here would be whatever date it is that they put it in service. But let's say it was March 3rd. They're going to put 3/3 of 2014, not 1/1 of the tax year. Okay. It's not a huge deal on the mileage, but I can tell you on depreciation, it is a massive deal because depreciation is calculated over years. And if you're putting 1/1 of 2021 for a item or property that was bought in 2008, the likelihood is that product is already devalued. There is no depreciation left for only back 12 years. Max on most is 7. The average is between 3 and 5. So something to keep in mind. So in this case, we're going to do 120 or 120 of 2018. We're going to put in the total business miles. In this case, we're going to say 6539. If they know they're commuting miles, you can put them in. If they know the miles for other uses, you can put that in as well, but it's not required. But questions 45, 46, 47, and 47A and 47B are required. You do want to make sure that you answer these questions, which is, was your vehicle available during off-duty hours? Do you have another vehicle for personal use? Do you have evidence to support your deduction? And is the evidence written? Okay, so now that we've entered that amount, if we go back up here to line 9, you will see the car and truck mileage is calculated, right? If they want to do actual expenses, it's a little trickier. But I will show you that after I show you this. If they have more than one vehicle that they are taking mileage on, you can use this worksheet button down here at the bottom, and you can add additional vehicles. I think it's 3. You can add 3 more additional vehicles. If they have more than 3, then you have to use the depreciation module, which is what I'm going to show you next. Okay, so I'm going to uncheck this box so we can go look at the depreciation module. Again, this is a more complex way, but I want to make sure that you guys know how to do it. So we're going to go over here to, we're going to go up rather to this field. And if we click form links, it's going to take us to this car and truck worksheet. I did that for a reason. You will not ever fill anything out on this car and truck worksheet. Everything is grayed out. These are auto-calculated fields. So I'm trying to save you that effort or that confusion and that phone call that I know will come into support for this. If you are going to use actual expenses, you want to use the depreciation module right here on the left. You go to depreciation, and then you have car, truck, vehicle allocation. You're going to click new asset. You're going to put a description of the vehicle. You're going to put in the date placed in service, which again is the date that the vehicle was first used. We're going to do light duty trucks. Okay. We're going to hit OK. And inside here, you've got to put a cost basis. If I try to move to mileage expenses, it's not going to let me move. It's going to tell me I need a cost basis. Cost basis is what the car was originally valued at when you purchased it. So I'm just going to put 25,000. If you don't know the salvage value, that's fine. It doesn't matter for this section. But we do need to answer these questions. Again, these are very similar to the same questions that we had on part 4 of the Schedule C. So now that we've answered the questions, we can click mileage. Oops, I did answer all the questions. There we go. So we're going to put in the total vehicle mileage for the year, right? So 6539. Now this is where it gets particularly interesting. If you are doing actual mileage this way, you can. You just have to come down into this section and enter it. And that'll do the mileage this way. If you're doing actual expenses, this is what I tell people to do. Because the mileage is irrelevant, right? You just put 1 in the Schedule C under that mileage, right? And then we can put in our expenses here. And let's do, so now when we hit close, we do return to list. We do close here. When we go back to this Schedule C and look at line 9, car and truck is pretty low. And the reason for that is because there's only 1 mile. You still, and I did that for a reason, you still want to make sure that you're putting the mileage in, because that is what is going to determine the business use. So if my total vehicle miles is 6539 and I only put 1 mile here, the business use is less than 1%, right? So if you're not going to use the miles at all, just put 1, and then you can do 1 and 1. You want to make sure that the total vehicle mileage and the amount of miles that you put into these bottom sections, that the total equals out. That's really what you're trying to do. So you see now that they are 100% business, right? That amount changes, and it also added the depreciation in. So that is something else that you want to take into account when you're determining whether or not you do standard mileage or actual expenses, is don't discount the amount of depreciation that could be there for that vehicle as well. So you want to make sure that that's there.
Kevin, can you explain a little bit the difference between those two?
The difference between mileage and actual expenses,
please.
Sure. Mileage is a formula. You take the number of business miles and you multiply it by whatever the IRS has listed as the mileage rate. I don't remember what it is right off the head. I think it's 57.5 cents. So you take the number of business miles, you multiply it by the business mileage rate. I want to say it's 57.5, but I'm not positive of that. You want to make sure you know what that is.
I was referring more like for the tax preparers, right? How would they determine whether to do one or the other.
Well, that's what I'm saying. You're gonna have to do the math.
Or they could do one and see if it's more beneficial than the other and try one and then the other.
Right. Yeah, you could. You can try one or the other. The reality also is this. If we use that depreciation module and we do the car and truck worksheet, right? Back where we were, if I put in the mileage here, let's just say I put in 25,000 miles, right?
And
If I put in 25,
and I'm sorry, Kevin, because I'm trying to slow down for the people that's new to this. So 25,000 miles is the total mile that the vehicle has as of today, that you're doing I'm sorry, as of 12/31, right?
yes, it's the total. Well, the total vehicle mileage for the year.
For the year.
You
Is it the total vehicle mileage that they put
I
in
just
for that
I
year?
just put in the business miles because most people don't know what their commute miles are.
Okay, so they put in the total mile that they're putting on that vehicle for that particular year.
Right. That's what I always do is
Okay,
put in the actual business miles because again, most of your taxpayers do not know what their commuting miles are.
okay,
They know what their business miles are generally. Right.
okay.
So if we put that in. So we have told it back here on the general tab.
Uh-huh.
Let me go back, it's calculating. Not to force actual expenses and not to force the standard mileage rate, right?
Uh-huh.
So if I go over here and I put in the business miles of 25,000, we know that that's going to be greater than this number,
Okay.
right? Because this number is going to be somewhere around $12,000,
Okay.
right? We know because it's 50, we know it's over 50 cents a mile, so I can eyeball it, right, and say that's going to be greater than the number that we have here, right?
Okay.
So if I close here and go return to list, it's going to give me the car and truck expenses as the standard mileage rate because it's greater. The
Okay.
software will, if you use that method, right, to determine, then the software will determine based on which one is more. It's going to give your client the most beneficial one, right? So if I come back to this, for example, and I put 15,000 in gas oil, right, and close, then it's going to bounce back now when we go back here to giving me car and truck expenses and the depreciation. It's going to give me the actual expenses. So it's going to know one way or the other. What I would tell you is generally people have no idea what their actual expenses are. They get an idea, but that's, if you're not sure which one to take, then use the depreciation module the same way I just did.
Can you go back to the yes or no questions real quick?
On here, sure.
Just a little side note, you guys, if I were you, I would take a picture of the screen because it's easy to forget. And the only reason I say that is because I like the way Kevin did it, where he did it in a way that to allow the system to pick the one that is going to be more beneficial to the client based on the information that you had put in the system.
Right.
So that yes or no question, I know I get a lot of call from people on how to answer it. So I was like, yeah, take a picture of it. Even though we're going to send this information to you, but it won't hurt for you to take a picture and print it and have it on your desk. So when you get to this point, if you're doing a tax return, you'll know how to fill this out. Also, Kevin, I know that there's also something where if you were to choose one or the other, it's like if you were to, the rules that they have, if they were to choose actual expenses, then I believe, I don't have my notes, that they have to continue to do actual expenses or something.
No, that's.
You could switch every year, one or the other?
Yeah, you can. The key to it is this. It's not really actual expenses that is the issue. It's the depreciation that is the issue. Once you begin depreciating a vehicle, you are supposed to continue depreciating the vehicle and you cannot come back later and then restart the depreciation. So for example, in this vehicle, if I didn't place it in service, let's say I did actual expenses in 2018 and got depreciation in the first year, and then I went to mileage the next year, the IRS, so let's say in 18 I did actual expenses, in 19 I did mileage, and then in 20 I did actual expenses again. The IRS's problem is this: I can't then claim depreciation in 20 because the depreciation started in 18 and I skipped 19, which took me out.
Mm.
So that's where technically what you're saying is correct in regards to depreciation, specifically not to the actual vehicle expenses, but to the depreciation end of it. Generally, this is what I tell people: stick with one or the other. Either take your mileage and continue taking your mileage until your depreciation runs out, I'm sorry, take your mileage if that's what you got. Take your actual expenses, but watch the depreciation piece, because when the actual expenses, when the depreciation runs out, then your actual expenses might not be as much as your mileage. It's a little tricky, and we're kind of diving into tax theory places, but yeah, I am not aware of any restriction that is in place that says you have to do one or the other.
I have one more question while we're in this subject. Can you show us how to do the full depreciation? So you guys, what I'm referring to, especially for those of you that have, let's say, truck drivers, or you have a client that bought a vehicle that I believe is over 600 pounds. If they made a lot of money, you could do a full depreciation for that year, and it'll help them a lot. Can you show us how to do a full depreciation on a vehicle?
Yeah, on a vehicle, it's well, that's tricky. I'll say it that way, because here's the deal, and I'm glad you kind of brought that up. You can take mileage, or you can take actual expenses and depreciation. You cannot take mileage and depreciation on the same vehicle.
Okay.
Doesn't work that way. And the reason for that is the mileage rate that is calculated includes depreciation. That's why it costs more than gas, right? If and I use this as an example, no person is paying over 50 cents a mile at the gas station, right? That would be an insane amount of money for a single gallon of gas, right? Most of us get 20 miles to a gallon, so that's significantly less. Part of that calculation is depreciation on the vehicle, oil, maintenance, those kinds of things. So the mileage rate includes depreciation already. So you can't take mileage and depreciation on the same vehicle. It's one or the other, right? It's either mileage or actual expenses and depreciation. So I can show you how to take it on a different vehicle that they're not taking mileage on.
Right.
But vehicles themselves, the easiest way is, if they're going to take depreciation, do it out of the car and truck allocation.
Okay.
If you're using some other item, which is probably a better way for us to do depreciation.
Yeah. So let's say that the client, this is a new client, and they want to do a full depreciation on their vehicle. How would they do that?
That's what I'm saying. If you're talking about vehicles versus other assets,
exactly, that's what I'm talking about, a vehicle.
Then they would take actual expenses and depreciation from here. And the depreciation is going to calculate itself based on the date placed in service and the cost. And if we click that depreciation tab, you will see that, right? The year will tell you whether or not it qualifies for Section 179, which is a full value depreciation, right? Can I change this now? So if I was to do that, for example, you're going to see the depreciation is significantly different. And I may have just messed this up, so it's entirely possible. Now, see, that depreciation now is 18,200.
Okay.
That's drastically different, right? Because of the year that it was placed in service. Now, the key piece to this, though, is if you do this, they can't do it next year.
Right.
Right. They've wiped the depreciation out.
Yes. So you guys, the only reason I would do something like this is, or I will even think about doing something like this, is many times you have clients that are trying to buy a house and they are not trying to have all these expenses. Then this will be a good route to go, because with depreciation, they actually able to, it doesn't affect the AGI. It actually, many lenders actually it help because they add it to their loan. I believe, Prince, are you on the meeting? Because I know we have a realtor in the house. I don't know if he's in. I guess not. He's not there. But yeah, so go ahead, Kevin. Yeah, that was it.
So now depreciation for other items or for items that you're not claiming business miles on, right? Or I sort of use it in this context, and this is what this is the way I normally handle depreciation. So depreciation doesn't go to a car and truck vehicle allocation, right? It goes to the Schedule C directly. So we're going to do Schedule C. We're going to do new asset, and you'll see there's a lot of different things. Like you can depreciate sheep. It's incredible the amount of things that you can depreciate. We're going to do software,
It's not.
right? So we're going to put in the software.
Well, the other guy used one and he didn't have a problem.
Yeah, at one.
So then we're going to put in the original cost basis, right? And because it was placed in service on 1/1, when we go to the depreciation, it's not calculating out anything for the federal depreciation. The reason for that is this is the item that's here. And that's why I said some of these things you guys have to know. I mean, I kind of hate to say it that way. There's certain things that have to be known for where to go. Is it running? Let me see. What did I do? Bonus. Just taking that off because I want to see. Why am I not getting it? What did I do here? Ugh. This may be a problem inside my software, guys, just for the record. I have a build that does stuff. Let me change this date. Yeah, I think I broke stuff in here. But that's essentially how it works. I've already got so much. I think I'm over the cap on this stuff. My build is broken. I apologize for that. But that's essentially how you're going to run depreciation. You go in, you run it here, you click new asset, you select whatever it happens to be. You're going to enter the amounts that are needed, right? And depreciation generally will calculate if it qualifies for depreciation, right? Some cases it does, some cases it doesn't. It's just a matter of which it is. In this case, I don't. Yeah, I'm not electing out of it. So there you go. See, it gave us the full amount on that listed property because that's what you get unless you opt out of the special depreciation. So depreciation is pretty simple as far as that goes. I am going to go clean this up a little bit because we've done so much in here.
Kevin, while you do that, so just to add a little bit to what Kevin already said, again, for those of you who have truck drivers, they purchase a lot of machinery and equipment. So those are the things you want to go and depreciate that will give them a lot of credit. But just let me see what else. Even people who actually have an office and they want to depreciate their printer, their computers, and things like that. That's where you go do it.
Yeah, you'll use the Schedule C section. I'm going to go back down here and just sort of mark this.
Does anyone have any question? Please jump in, just unmute and ask the question now before we move to the next step.
Okay, I have a question.
Oh.
Okay, so when it comes to the depreciation, if I'm being right or wrong, can someone correct me? Because for 1 year, or I kind of heard something related to that, or if you do depreciation 1 year, then the next year has to be in the same item per se, depreciation again. Otherwise it's a red flag to the IRS, or can I get a little bit more information into that?
Yeah, I mean, you're very right in that regard. You either need to dispose of it. It's not that necessarily 1 year to 1 year, it's 1 year to 2 years. So for example, if I had a computer that I depreciated this year, but didn't depreciate next year, okay, no big deal. But if I then brought it back in the third year, the same computer, that's where the IRS is going to go, wait, why didn't you claim it in the second year? Now, depreciation is very different right now because they have a lot of bonus depreciation, which essentially means you can wipe out the entire depreciation or the entire depreciation amount in a single year. So then at the next year, you're not getting anything for it. So basically, they're letting you get the full depreciation in a single year on an asset on quite a few assets now. And I'll kind of show you real quick. So see this furnitures and fixtures, right? I just added this. If this amount, if the date placed in service is in the tax year, and if we look at this bonus depreciation thing, it will actually kind of tell you. They're giving you the special depreciation allowance is 100% for any property, and by property they mean anything, any depreciable asset, right? That was purchased after 9/27 in 2017. So there's not a lot of year to year carryover for depreciation anymore, right? So if I hit OK on this, right, and I go back and look at the depreciation, you see how it's all 15,000, everything is out. But when I go back here, it's not showing any depreciation, but I promise if I go back here, there's the 15,000. That's the full amount that I paid for that furniture for this year, for tax year 2021. That's because I'm getting the full bonus depreciation. If I was to opt out of that, which they can do, if I was to opt out, right, I elect out, you're going to see a drastic difference in the way the depreciation is calculated. Now I'm getting 2,000, but here's the difference. I now get to just spread that depreciation over multiple years. And in this particular case, I get to spread that out over 7 years because that's the recovery period for furniture. So I can either take the full 15,000 now, or I can spread my depreciation out over 7 years. That's where sometimes you've got to watch what your client is doing. For example, if they already have a negative AGI, you taking full depreciation may not be doing anything at all. Or if their AGI is still around 0, right? Adding that bonus depreciation might not help them at all. You may do better for them to calculate it over 7 years, because next year they might need that deduction amount, right? As opposed to taking the full 15,000 this year. A lot of it is just understanding the way depreciation moves. But the basis that you need to know is that you can take 100% of it this year if the asset was placed in service after, what was it, September 27th of 2017. They can take 100% the current year, or they can opt out of that and have the depreciation spread out over a number of years. How it impacts your taxpayer after that is something you'll have to figure out and determine what's the best course of action. I feel like Anna was going to jump in here and say something. I saw her.
No, what I was going to say is just to, again, because I know a lot of people is new to this, and we do have some that do know some, but they just new to the software. And with the depreciation, what we referring to, is two different things. So one is for full depreciation for vehicle, the vehicle has to be over 600 pounds, right?
6,000.
I'm sorry, 600, 6,000
Yeah,
pounds.
it has to be over 6,000.
6,000 pounds. Thank you, Kevin. Yeah, so 6,000 pounds. And what that means is it could be like an SUV and so on. So again, I only would consider to do the full depreciation on a 6,000 pound vehicle when I see that my clients owe a lot of money, but also can afford to have too many expenses because they're trying to purchase a home, right? That would be the only reason I will go there. Otherwise, it would be better to do it over time. So every year it will help them to have that deduction. Because once you do the full depreciation for that vehicle, next year, that's it. You can claim that vehicle
Right.
depreciation anymore.
Yeah, at that point, you can leave it in the depreciation module and carry it to the 4562, but it's going to come up with zeros every time.
And also another thing to consider with depreciation is that if you have a person who owns a restaurant and let's say they buy a big equipment like a stove or something like that, those things you have to depreciate over time. They cannot take the full depreciation in 1 year.
Right. Yeah. Some things can, some things can't. That bonus depreciation really, it really varies depending on the type of product it was, those kinds of things.
So does anybody have any question about the Schedule C? I know we spend a lot of time because on this particular form, because I know it's one of the forms we get the most call because it could be a little complicated. Because of course, this is for the small business, for your client that has small businesses. So anybody have any question before we move on? Okay. ¿Alguien tiene pregunta de esta forma del Schedule C antes que nos movamos para la próxima página? O si no, recuerde que nos puede llamar y nosotros podemos hacer una sesión 1-1 y hablar y enseñarle las cosas que no aprendieron. Okay, Kevin, I think we're good to go.
Okay. So now we're going to move on. And this is usually at the point for me that I just come up here and hit verify. And this will tell me what I'm missing across the board, right? So let's go look at what I'm missing on the client data sheet. Okay, so signed 8879. Let's just assume I got that. So now let's go to the 8879. Okay, the 8879 is saying, how do I want to get the refund? We're going to do a bank product on this one. Oh, I did not put in the driver's license type. So let me show you something here. If I hit verify and I go to this field, and in this case, this is about virtual currency, Bitcoin, cryptocurrencies, things like that. I'm going to say no because it's probably no for most people. If I put an X in this box and I hit enter, it will take me to the next. It'll rerun the verify. And if I hit enter again, it will take me to the next field. This field is about the recovery rebate credit. I am going to check the box and say that they got it fully, so I don't need to do the worksheet. Enter again. And over here, it's going to take me to this field, which it shouldn't be. Why is it taking me to that? Let's try that again, because I don't need to do the worksheet. There you go. So now we need to indicate the preparer type. For the most part, you guys won't have to do this. Hang on. I don't have a prayer. But yeah, I didn't save my prayer. So 8812, right? And we talked about this, how we were going to get to this form specifically, but I want to get to it now. I'm going to cover this in the next section after we take a quick little break when we finish this about tax law updates. But as you guys may or may not know, since July, I think, taxpayers have been getting payments from the IRS anywhere from $250 to $300 per dependent per month. That was an advanced payment on the child tax credit. Okay, that has to be reported. And that gets reported to line 14F of the 8812. Now, the IRS sent out letters, supposedly. We'll see. I haven't actually seen one yet. It's letter 6419. And the amount that you need to enter into line 14F is on that letter. They do not have that letter. They can get the information from the IRS website. I'm going to talk about that in the tax law updates. In this particular case, I'm going to say that they got what they were supposed to. And so you see, I hit enter. Now it's going to take me through the EIC checklist. Yes, the child is unmarried. No. So here's the 8867, right? I've done everything. I'm going to verify. All I have left is the 8867 in the bank app. So let's do the 8867.
again, since I know a lot of people are new to the software, this is one of the cool things I love about the software, that when you hit enter, it takes you to what the answer is supposed to be. Yes, by law, we tell you you gotta read, but just know that wherever the software take you is saying, this is what the answer needs to be in order for the person to qualify for this credit.
Generally.
Yeah, generally, yeah.
Generally, that is the case.
Yeah.
When you get into the document section, you want to make sure that you're selecting every document that you used. But for the most part, yeah, I mean, she's right. Yes, I don't know. So now we have the bank application. So let's go look at the bank application. Okay. So in particular, there's a lot of different checkboxes that you guys can put in here. Oops, sorry. These are all yes or no questions in this section. Some things you need, some things you don't. You just have to pay attention. The ones you do need for sure are the citizenship status. If they're married, filing joint, then you need the citizenship status for each of them, married, the spouse as well as the taxpayer. Right here, we can transfer the ID information from CDS. That means client data sheet, right? So we're going to hit that X, and you're going to see that ID information that I put on the client data sheet is now carried over to the bank application. You want to mark this box that you have verified their identity. Then we get into the fast cash information. Okay. Some of you may qualify to offer fast cash advances to your customers. There are two different types of advances. There is a fast cash advance, which happens after the IRS acknowledges the return. So once the IRS accepts the return, then the application is then processed. And they will either be approved or denied. If they're approved, you'll get a check to print or direct deposit or however they're getting it, right? Then there is a pre-AC, okay? And the pre-AC advance comes before the IRS actually accepts the return. The fees are higher because there's a greater risk because the IRS could reject that return because they've already filed somewhere. I've seen it happen. Now, if you are able, I'll say it that way, if you are able to offer the pre-AC advances, then you want to check both boxes. I am not approved for either on this EFID, but that's what you'll do for the advance. If they want the pre-AC, you check both boxes. If they just want it post-AC or post-acknowledgement after the IRS has accepted the return, you just check the top box. Does that make sense? Okay.
Kevin, question. Do you know if they are accepting people for the cash advance with their last check stub?
Absolutely not.
Okay.
Absolutely not. You cannot file a tax return with the last paycheck stub.
Okay, good. 'Cause we know
Period.
a lot of new people.
Yeah. You have to remember that just because you're applying for an advance doesn't change the rules of the tax return, right? You are filing their tax return, and without a W-2,
Mhm.
if you're filing a tax return, if you're filling out a W-2 in a tax return using the last paycheck stub, you're committing fraud. There's no other way to say that. That is fraud because you do not have the physical W-2 in your hand. There is oftentimes stuff that is not on the last paycheck stub that shows up on that W-2.
How about
Right.
people who are self-employed? Are they qualifying those?
Sure. Yeah.
Okay.
Yeah, there's a variety of things that they look at. I couldn't tell you what all the financing requirements are for it. It's a computer basically plugs in all their information and it does a risk assessment. Is the risk high that this return is not going to fund? Yes. Then they'll deny it. No, then they'll approve it. That's my basic understanding of it.
Go up a little bit. I want to show them something. Go up a little bit. I want to show them something real quick. Go to that question right here where it says tax. Go to that where you put the C for taxpayer. Okay, so I wanted to show them something because remember that there's a lot of people that is new to this software. If you could put your mouse, because I know they can see mine, you see, I want them to know that when you click on a box, just in case you're not sure how to answer that question, the software give you more details at the bottom. You see, are you able to see Kevin's mouse in the gray part all the way at the bottom? It tells you more detail on how to answer that question. And that's everywhere in the software. If you ever click somewhere that you're not sure how to answer that question, make sure you read at the bottom. Make that your best friend because it give you more information. Yeah.
Yeah, absolutely. So if this taxpayer, let's just say we're going to do a regular bank product, no advance. They don't want an advance. And we're going to do it. They want to do a direct deposit. So if I click this client pass-through account information, it's going to pull the bank information that I put on the client data sheet directly to here. Okay.
Kevin, before you move forward, this is another one we have a lot of problem. I don't know if the software changed it yet. You know that when we fill out the information, even if we put the bank information in the client data, do they still need to make sure they come to this sheet and change it from cashier's check to direct deposit?
Yes, because just because the bank information, and this is legitimately the reason, they may tell you that they want a direct deposit on the front until they get to the bank application. And then they go, you know what? No, I'll just come pick up the check. So our options then would be if we assumed that because the information is direct deposit on there, right? Then you run the opposite risk, right? Where, well, that person didn't want it. And that's why we do it. That's why it is that way. Now you can set it, and I'm trying to remember exactly where it is. I believe it's in here. Trying to remember where it is. There was a tax alert somewhere, and I cannot remember where it is right off the top of
Yeah,
my
I
head.
remember years ago they had done that because a lot of people was having trouble with this part. So you guys, while Kevin looked for that, let me just tell you why I wanted to emphasize on this area. So when you do a tax return, even though you put in the client data the bank account information that the client wants direct deposit, the system automatically defaults to cashier's check. So if you don't come, if when you come to the bank application, if you don't come to this section and change it from cashier checks to direct deposit, your client will get a check at the office and they will be very mad. So if you could do a sticky note and put it in your computer and to remind you that when a client, when you do a tax return, this be one of the critical things you want to check because the system is not going to remind you to check this area. It's your responsibility to remember to go to this part and switch if the client not going to pick up a check at your office to switch it to direct deposit.
I'm trying to remember. It looks like they took it out. I could have sworn it was
I think that
inside
maybe like
here.
4 years ago they created that alert because so many people was complaining on this area, and I thought they did, but I don't think none of us ever went to use it.
Yeah, it was here at one point, and I don't know. I mean, it appears that they moved it, or they took it out altogether, and I'm thinking they took it out altogether.
If any of my old people that have been with me ever use that feature, can you jump in and let us know?
I think it's in here.
I know some
Hang on,
I
let
never
me
used it personally.
try to remember. No. Yeah, I don't. I remember seeing it at one point. I don't know where it is now.
Okay.
And it's
Yeah.
quite possible that they took it out.
That's why I just tell people put a sticky note on your computer as a reminder to make sure you check that. That's part of your the things that you verify when you finish a tax return.
Yeah. No. me see what we got here. That's because I don't know how to answer phone numbers properly. So when we verify now, right? The last thing we have to do is print the bank document. So you got a couple of options here on how you do it. Your office is going to have their own process. The way I generally do it is I do print final tax return, and the bank docs are included in that. So when you see that, you do file or print final tax return or print bank documents, whichever way you're doing it. Then you hit next, and you'll see print final tax return with bank documents. So they get everything at that point.
Okay, of course, I have a question on this one. So you're saying that we don't have to do print bank document and then print final tax return?
No, you can do final tax return with the bank documents.
Okay, so they must have changed that. Okay, that's awesome to know because we were doing both.
So
Even
now
when we send it for
these are,
signature,
the,
Kevin,
I'm sorry?
even when we send it for signature, because normally when we send it for
Yes.
signature, we could just do print final tax return and the client will be signing both at the same time?
Yes.
Awesome, okay.
So you got options on how taxpayers can sign, right? They can sign physically once you print, and that's fine. You just hit print and, give them the signature pages that they need to sign, and they sign that way. If you're using the signature pads in the office, you're going to click sign doc, and you're going to get this one. And in my case, I don't have a signature pad installed, but you're going to get the boxes pop up. Next. Now, once they sign the bank documents, you have to mark this bank signature verification. You will get a message if you don't. It has already indicated that I went to the print. So let me get back here. Setup. Hold on. I need to go change my stuff. There it is. So print final tax return. So the second option that they have then is remote sign. Okay, and I want to be really clear on this. I'm going to show you what this looks like, and I'm going to hope I don't accidentally send this because I really don't want to pay for this later. So you click remote sign. Yeah, well, let me. So when you click remote sign, the very first box that pops up is going to be for in-office signatures, okay? You are going to leave that box unchecked. You do not want to check anything in that box because you're trying to get them to sign on their phone. They are not in your office using a signature pad, right? Once you do that, the next box will pop up. And that is where you will decide how you are going to send the remote signature request to the taxpayer and or spouse. You can do it via text message or you can do it via email, either one of those options. And then you send, okay? When they sign, it will come and you can watch the progress by going to remote signature in this left-hand menu. And you can see, you can resend from here as well. You can open, whatever the case is. Now, when it's fully signed, if you come into the document archive, you will see, and it will say signed full tax return bank application. Okay.
One thing to add to that is, and some of the things that I share is based on experience we went through the prior years. So some of the things that I came up last year was that people was like, hey, I was charged twice for the same client. And it's because they thought that they charge per client, and no, they charge per signature. So what I suggest is that before you send that signature to that client, make sure that return is final. Because many times you send them for signature, the client come back and make a change. Now you got to have them sign again. Guess what? You're going to get charged twice. And as you've seen, Kevin show you in the client data, you could actually opt in for that signature fee to be charged directly to your client. And Kevin, correct me on that part if I'm wrong, instead of you having to pay for it.
Well, you're going to pay for it, but you can collect it by increasing the fee by that signature amount. That's really what that's doing.
Right. So they're
Right,
still gonna
that's-
charge it out of your account, but you're gonna get paid
Right.
from. the
You're just
other
passing that
compensation
fee. Yeah, you're passing it directly to them versus it coming out of your prep fee. So if your prep fee is $100 and you've got a remote signature request, right? Which it would raise your fee to 105. They would pay you 105, and then that $5 would then get paid out to the software developers. Okay,
I have a question.
sure.
Can that $5 fee be automatically, put into the system, for the client, like, or that's something that you have to do like word of mouth, or how does that work?
No, it's there, but down here at the bottom of the client data sheet, this is a yes or no question, and it's whether or not you want to add it to it. And I can kind of show you in the billing setup. Let me re-enable invoicing because I had disabled it, but I can re-enable it so that you guys can see what it looks like. There it is. So if I say yes here, right, and we go down to the invoice, you'll see the remote signature fee is there in the related to tax prep services, right? If I say no there, then that will be blank. So that's really what the difference is in that particular piece as far as that goes.
So basically, regardless, the system gonna withdraw that $5 out of your account for that signature. But if you were to answer yes, the good thing is that at least even though that in the back end you pay $5 for that signature, you collect it from the clients, because when your preparation fee get deposited, also that $5 is going to be deposited as well.
Right. Exactly.
Got
And
it.
if it's two people, then it'll show 10. So if it's taxpayer and spouse, then that fee goes from 5 to 10 because it's 5 per. It's essentially $5 per social that is signing. That's the best way I can kind of say it. So where do we go? Verify. Oh, okay. Yeah, I was printing. So print, final tax return. Okay, so down here, you've got a couple of other options too. And these are, you can create PDFs if you're going to use some third-party application. I will tell you this, software developers do not want you using a third-party application for things to be signed. And they even, oh, good. Well, at least I'm not getting the warning message now. I used to. Used to be a warning message about not doing that. And then you have the option to email the return. Now, if you email it using this email button, that is not a remote signature request. They are just getting a copy of the return and the bank documents. Okay. So I wanted to specifically clarify that. If I hit email, it's going to give me that password, and then it's going to pop a box over here that shows me what that email address, what that email is going to look like. And then I can send them the password any way that I want, right? If I close now, I should be able to verify successfully.
Kevin, I have a question. I have one of my clients send me a question. This go back to the part. So I don't know if you remember years ago, you have show us that we had to print bank document first and then print final tax return. So I know
Right.
you just mentioned that we just got to do one. So their question was, hey, do we need to do any setup in the computer in order to be able to do that? Well, now we're just doing one instead of two.
So no, when you print the first time, but I will tell you this way. So the way it's working right now is that the bank application's been added and the software knows that the bank docs have not been printed at all. Then when you go print bank documents or you go print final tax return, it will include the bank documents in it. The next time you go to print, it will only include the return. It will not include the bank documents unless you set it up like I did. So if you go into setup, printer setup, and then this 1040 return printing, you can add the bank application to whichever copy it is that you're doing, right? If you want it for your copy, but you don't want it for the client, however you're doing it, the bank application is an option now that you can add in.
Adding to the copy that I'm printing?
Right. Yeah, in the 1040 return printing, you now have a bank application checkbox,
Okay.
right? You also can change the print order. I don't know if anybody saw this or not,
No.
but yeah, you can come in and move these things around and reorder this however you want. So if you want the bank application to print first, just move it up to the top.
Mm,
So you can reorder those things now. That was added, I want to say towards the end of last year, that was added.
okay.
So
Okay.
now we verify successfully,
Mhm.
right? We have no more errors. So to send the return, it's just a matter of clicking Q. And that's where you'll see. We talked about the wallet details earlier, right? It's going to come in here. It's going to let you know what the fee is on this return. So you'll know what it is before you even queue the return, whatever fees are due on it. Okay. Then you click Q and that queues the return and it'll say return queued. And to send it, you go transmit and then hit transmit again. I'm not going to. I'm going to remove it from the queue. So if I remove it from the queue, it will no longer be. And if I go look it up, you see it's back to EF return. That's the other thing I want to point out. Couple of things inside this as far as this return status column. I know it's a little confusing, so I want to clarify some things. If it says EF return, that only means that the return has been marked as that it will be electronically filed. You have not queued it, it has not been sent. It just means that form 8879 is on the return. It is not going to be paper filed, right? You've indicated that the return is going to be electronically filed, not paper filed. That is all it means. The difference between acknowledged and complete is absolutely nothing. They're identical. My advice to you guys is to do this in your office setup. Go setup, office setup. And in this e-filing tab, check these boxes. It says leave the tax return status at acknowledged. It will eliminate all of that confusion for you between what's complete and what's acknowledged. Everything is acknowledged, and then you don't have to worry about that anymore. Okay. Will make life a whole lot easier as far as that goes. So does anybody have any questions about anything inside the software right now before we jump into tax law updates? I know we're going to need to take probably a 5-minute break or so. We've been at it for about 2 hours, so I want to give everybody a chance to stand up, stretch, walk around, come back in 5 minutes.
Kevin, can you show them real quick where to click when they using the scanner? We missed that.
I'm not sure how that was missed, but okay. Document archive. If you're going to scan, you have to hit scan. I don't have a scanner installed, so if I hit snap, it's not going to do anything.
Okay, no, just for them to see how to find it, because I had some client that just bought the scanner. Just wanted them to get an idea.
Yep, it's right here in document archive, and then you click scan, and you can crop and rotate, but you want to make sure that you have the right scanner and that it has been installed. Those are the two caveats to that whole thing.
Okay, so before we go on break, just want to cover some things. One is if you need to know what scanner to buy and so on, just text us and we'll send you the information. The other thing is for my business owners, the next thing we're going to cover is going to be the new law. You could actually log off because we're going to cover that on the second class. I just wanted you to log in for the morning class for this part so you get an idea on how to navigate the software and how to do a tax return, because we do not cover this part on the second class. We just focus on the new law and other things that business owners needs to know. So you're welcome to log off now and then log in at 1 o'clock. So be sure to log into the 1 o'clock on the second link that we send you, because it's a different link than this one. Anybody have question before they log off? It's not.
I'm the greatest trainer in the world. I never have questions.
Right. Well, so make sure those of you that are other employees, make sure you stay in to take the second part of the training for the new law. Okay.
Okay, I'm going to pause the rookie here. So let's Minimize that. This. All right. Let's go ahead and get picked back up on what we're doing here. I'm going to get through this information as quickly as I can, but make sure that you guys know everything you need to. So this is tax law updates for tax year 2021. What we're going to talk about in this presentation is the child tax credit and advanced child tax credit reconciliation. We are also going to talk about the child and dependent care credit. We're going to talk about a couple of changes or slight modifications to EIC. Talk about the recovery rebate credit. I think I took out the changes to the premium tax credit. If not, we'll go through it quickly. Taxpayer authentication, that is a big one. A couple of other things that we'll need to know. So starting with the child tax credit and advanced child tax credit. So child tax credit is fully refundable for 2021. Previously, it was 600 was non-refundable, 1400 was refundable. Now it is fully refundable, and the credit amounts have increased. Okay, the credit amount now is $3,000 per child ages 6 through 17, and $3,600 for children under age 6, so 5 and below. Okay, eligible children are now those under age 18. Previously, it was under age 17. Now 17-year-olds qualify. These changes apply only to taxpayers who had their main home in the United States for more than half of the year for 2021. So if they had their main home outside of the US for more than half of the year, then the old child tax credit rules apply, as well as amounts. So they don't get an increase if their main home was outside of the United States for more than half of the year. Okay. There are 2 phase outs for child tax credit. The first phase out reduces the credit down to $2,000 when their AGI reaches these numbers here. So single 75,000, married filing joint 150,000, head of household 112,500. The second phase out is the remaining $2,000 will continue to be reduced on AGI or reduced based on the AGI until it reaches 0. The married filing joints AGI cap is 400,000. If they're over 400,000, they're not going to get anything out of child tax credit. For everyone else, so for single and head of household, it's 200,000. So once they hit 200,000, they're not going to qualify for child tax credit at all. Okay. Now, beginning in July, taxpayers began receiving payments from the IRS for roughly half of their total child tax credit. The monthly payments were $250 for each child between 6 and 17, and $300 for each child under 6. Now, the calculations for the advance payments were based on information from either the taxpayer's 2020 or 2019 return, whichever one they had filed when those payments started. The IRS created an online portal, which we call CT Cup. Okay, it's the child tax credit update portal. It gave them the ability, or gave taxpayers the ability to opt out of receiving the advance payments, change bank accounts, change address, see history, determine which tax year was used to determine to calculate the advance payments, as well as make any changes to income, status, number of qualifying children. Okay, a lot of taxpayers probably did not do anything with this CT Cup, but those that did would have gone through a secure authentication process via ID.me, and we'll talk about that specifically in just a minute. So the reconciliation, which I showed you guys earlier, line 14F on the 8812. So any payments that they received had to be reconciled on the 8812. The result of the reconciliation is going to be one of 2 things. Either they are going to get a refundable credit, which means the calculated credit is greater than the advance payment received, or they're going to get additional tax, which means they got more advance payments than they were qualified to get. Okay, there is just because they got more than they were supposed to get in advanced child tax credit doesn't necessarily mean that they're going to have to pay it all back. And I'm going to talk about that in a couple of slides, okay? So how do they find out how much advanced child tax credit they got? Well, the answer is the IRS is sending that letter we talked about earlier, which is letter 6419. That letter will give them the amount of the advanced child tax credit they received in 2021. It will include the number of qualifying children. Now, if they lose that letter, they can access the information needed by logging into either the CT Cup, the Child Tax Credit Update portal, or their individual IRS online account. And again, we're going to talk about that ID Me process for those IRS online accounts in just a second. Okay. Taxpayers can they're going to use the STATI system, the Secure Access Digital Identity System. If they previously had an IRS online account, they don't need to do anything different, just log in, okay? So we talked about this safe harbor, or I mentioned earlier that not everybody who got more advanced child tax credit payments are gonna have to pay everything back. And here's the safe harbor for excess payments. So taxpayers will not have to repay an overpayment of up to $2,000 per child if they are single and their AGI is below 40,000. The phase out completely is gone at 80,000, which means between 40 and 80,000 not to pay a percentage of it back, but not all of it. Married filing joint, it's below 60 and the cap out is 120. And then head of household, it's 50,000 with the cap out of 100. Okay. So the 8812, which we looked at earlier, is now being used to calculate child tax credit as well as the other dependent credit. So there are 3 pages now. Page 1 calculates the other dependent and the child tax credit. Page 2 is being used for those people who did not have their main home in the United States for more than half the year. So they'll use the old rules on page 2. And page 3 will calculate any amount that the taxpayer has to pay back due to the total advance payments received being more than the calculated credit. Most of your taxpayers, and by most, I mean 99% of them, are only going to need to complete page 1. Okay, do we have any questions about child tax credit before I go to the dependent care credit? Okay. Nobody has any question on that? All right, so let's talk about the big change for the child and dependent care credit. So Form 2441 for tax year 2021 only, it is fully refundable. Okay, the amount of qualifying childcare expenses has increased to $8,000 for one child, used to be 3. The maximum credit is increased to $4,000. It was $1,050. It is $16,000 for 2 or more children. So if they have 2, it's $16,000. If they have 6, it's still $16,000. And the maximum credit was increased to $8,000. So let's explain how this credit actually works, because this is where the confusion is going to come in. Your taxpayers are likely going to see these $8,000 and $16,000 numbers and think that they are going to get that as a credit. That is not the way this works. The max credit any one person is going to see is $8,000. That's the absolute max they can do. And that's if they had $16,000 in expenses for childcare and they had 2 or more children. And their AGI is less than 125,000. So the way this works is you get 50% of your expenses back as a refundable credit. So if I spent $3,000 and my AGI is under 125,000, I would get $1,500 as a credit. Okay. If I spent 20,000 and I had two or more children, I would get 8,000 because I'm capped at 16. Okay. Now the credit gradually declines until it reaches 20% when the AGI reaches 183,000. Okay. So it will go down incrementally from 50% all the way down to 20% as their AGI goes from 125,000 to 183,000. Okay. Now these AGI caps are not like the other caps. They're not dependent on filing status. That is total. So whether they are single, whether they're head of household, or whether they're married filing joint, the caps are still the same. Okay. The 20% rate applies for AGIs between 183,000 and 400,000. So if their AGIs between 183,000 and $1 and 400,000, they will get 20% credit, not 50. Okay. And then it completely phases out. That's a typo. I apologize. The credit completely phases out at $400,000 and $1, right? Which means if their AGI is over $400,000, they're not gonna qualify for the child and dependent care credit. It's that simple. Okay. Now, for taxpayers who have their main home outside of the U.S. for more than half of the year, the credit is non-refundable. Okay. If you want more information specifically about this, go to the IRS's website. There's a child and dependent care tax FAQ that will answer a lot of those questions. I can answer some of them if you have them now. There's a new item on the 1040 Schedule 3, Part 2. It's line 13G that will show you the credit is refundable. And I bring that up because we are used to looking for the child and dependent care credit on Schedule 3, Part 1, line 2, which is where the non-refundable credits are. That line is still there, but that only applies to the people whose main home is outside of the United States for more than half of the year. Okay. There is a checkbox at the top of the form regarding qualifications for the credit. Okay. There's also a checkbox added to Part 2 to indicate that the taxpayer had more than 3 qualifying persons. Line B, if they have to, line 9B rather, if they need to enter 2020 expenses paid in 2021. The most important lines are for you guys is going to be line 10 on the 2441 is going to show the refundable credit, and then line 11 will show the non-refundable credit for those people whose main home was outside of the United States for more than half the year. Okay, so do we have any questions about the 2441 and the dependent care credit? Nobody.
Nope, you were very detailed, Kevin.
Okay, good. I'm glad we got that kind of covered. All right, so let's keep moving. So there's been a couple of permanent changes to EIC. So previously, the amount of investment income that you could have and still qualify for EIC, it was capped at 3,000. If it was over 3,000, then you no longer qualified for EIC if your investment income was over 3,000. That has been increased to 10,000. Okay, so taxpayers with children without SSNs will now be eligible for EIC without children. So let me explain that a little bit. So taxpayer has an SSN, but the dependents have ITINs. Previously, that disqualified them for qualifying for EIC. The law has changed. They can qualify for EIC, but not for the dependents. They qualify for EIC for themselves as someone who is qualifying without children. Does that make sense?
Can you repeat it again?
Yes, please.
Okay. So if the taxpayer has a social security number and their dependents, let's say they have one dependent, their one dependent has an ITIN. Previously, that disqualified them from EIC completely. They couldn't get it at all. Now what the rule says is that the taxpayer can qualify for EIC like they are a person who qualifies for EIC without children. So you can qualify for EIC without dependents. Your income has to be pretty low to qualify, and the credit is not very much, but you can qualify if you do not have dependents. taxpayers who have children that have ITINs are being treated like taxpayers who do not have dependents for EIC purposes. Does that better clarify it?
Yes.
Okay. So, couple of things that have changed. Prior year earned income election. Okay, so taxpayers may elect to use their 2019 earned income. That's not a typo. It is 2019. I know it says prior year, but it's not. It's 2019. If their 2019 earned income was greater than their 2021 earned income. So essentially, we saw this last year, right, where they could use their 2019 earned income to calculate EIC if their 2019 earned income was greater than their 2020 earned income. Well, the same thing applies for 2021, except there is a slight caveat. Last year, the IRS kind of took it in the shorts a little bit because they weren't clear. This year, they are crystal. You must have income in the 2021 year. Prior to that, it was sketchy as to whether or not they had to have earned income. So they have to have earned income in 2021 to qualify to be able to use their 2019 earned income to calculate EIC. If the only income, for example, I'll use this as an example. Taxpayers' only income in 2021 is unemployment. They cannot use their 2019 earned income to calculate EIC. The reason for that is because unemployment is unearned income. It is not earned income. So they don't qualify for EIC based on that alone. Now, let's say in 2019, they had $30,000 in earned income. And in 2021, they only had $8,000. Then they can use their 2019 earned income for calculating EIC. Now, if in 2019, they had $15,000 of earned income, and in 2021, they had $60,000 in earned income, they cannot use 2019 to calculate EITC. Does that make sense?
Yes, Kevin, let me add to that. I know that when we did the training on how to do a tax return, we did not cover on how to do this part, but don't worry, Janet and myself going to be calling all the new clients that are new to the software, and we're going to do a join me one-on-one to show you how to do this option for your clients.
Yeah, and I can briefly show you because it's really quick,
Okay.
right? If I go down to line, where is it? Line 27 is the EIC section, right? To actually do this, you have to check this box and you have to enter the 2019 earned income in line C. So whatever it happens to be. So my earned income is that. So let's say I do 30,000. Then it will calculate my EIC differently based on that. If I uncheck this, then my EIC is different. So there, you want to check, and I would say this, you want to check that 2019 earned income just to see, like if it's more than 2019, depending on where they fall on the scale, they could get more doing that than they get out of 2020. Because that scale is, there's a middle sweet spot in it, right? The lower your income, the lower your credit, the higher your income, the lower your credit. There's a middle area there where $1,000, $2,000 could shift it 60, 70 bucks to $1,000 bucks. It just kind of depends. So you do want to pay attention to that. I think Anna will get into the specifics of it with you guys a little bit more on the tax prep end in that one-on-one meeting. But I wanted to kind of briefly show you guys what that would look like.
And you know what? So they, again, so they could have an understanding. I'm gonna give you a quick example. You have a client who has one child and their earned income for 2021 is, let's say let's say $5,000, right? They are not going to get the full credit for that child because the earned income is $5,000. But if you know that in 2019 the earned income was 10,000, guess what? You are better off. I don't know, Kevin, I'm off. You are better off using 2019 earned income because the refund's going to be higher.
Right, and that's exactly right. That's what I was saying. There's a
Okay,
there's a middle ground sort of sweet spot, right? If your income is too low, then you're not maximizing the credit, and if your income is too high, then you can't maximize the credit. There's a section that's sort of in the middle, and in Anna's example is a prime example. If they made 5,000, their credit is actually going to be lower. Their EIC will be lower at 5,000 than it would be at 10,000. They would get more reporting more income. There's a really finite kind of sweet spot in there. So if their 2019 earned income is greater than their 2021, I would put it in and see. Watch the EIC, fill out the return, do that piece last, because you can always check and uncheck that box and see which one comes out with a greater EIC.
And I will actually use this as one of my sticky notes that I will have on my desk, you guys, because those are things that's easy to forget. Like put that as a reminder. Hey, before I finish a tax return, I finalize the tax return. Let me go to this section and see if my client could benefit from using their income from 2019. Because again, the system's not going to remind you to tell you, hey, this client could benefit from doing this. So, just the same way I told you to put a reminder to make sure when to check direct deposit in the bank application, if the client do one direct deposit, not a check, this could be something else you could add to that list. And another thing is I will put the information on the chat box for you if you want to take in-person class on how to do a tax return and learn all these things. I'm put the information on there. You could call this person. They're going to be having a class next week that you go attend.
Yeah. So a couple of other minor-ish modifications. I mean, it could be big. The criteria for individuals who qualify for EIC with no children has changed. The minimum age has been lowered to 19. It used to be 25. Now, again, this only applies to taxpayers who do not have any dependents. Okay. The maximum age has also been eliminated. So taxpayers over 65 that do not have dependents can now qualify for EIC. The maximum credit is $15,002, but the credit is fully phased out around $21,000. So kind of keep that in mind. They're not going to see a ton, but it could affect a few of your taxpayers, so you need to know. Recovery rebate credit. I know some of you guys are new, so I'll kind of explain as best I can. So the stimulus payments that the government sent out. In 2020, we had to reconcile those on the tax return. You had to put in how much they received, if they didn't receive it, things of that nature. Okay. The same thing is going to apply for 2021, right? We are going to have to reconcile the payment that came out in, what was it, March or April of 2021. It was $1,400 for each person on the tax return, essentially. Taxpayer spouse $1,400 apiece, each dependent with an SSN $1,400. Okay. There's a little extra information in here about that, but I want to get to this piece, which is the reconciliation. Okay. So how will they know how much EIP they received? They will get a letter in the mail from the IRS. It's letter 6475. Looks exactly the same as it did last year. Okay. The taxpayer loses that, they can get that information by accessing their IRS online account. As a word of warning for the recovery rebate credit, as well as for the advanced child tax credit payments, you want to be absolutely certain that that number that you reconcile with is correct. Because if it's not, the IRS is going to kick the return into, they're calling it error resolution now. Any seasoned preparer will tell you that error resolution is where tax returns go to die. It may be 6 months before you see anything out of that. So if you want to get paid timely, make sure that your taxpayers have these letters. If they don't have these letters, encourage them extremely strongly to go to the IRS website and create an account and get those numbers. Now, here's the second part of this. The second part of this is it doesn't matter what the taxpayer actually received. It matters what the IRS sent to them. So whether they actually received those payments or not doesn't matter. Whatever number is on the letter is the number you go with. If they are saying they didn't get their EIP payment, but the IRS is saying that they sent the EIP payment, they got their EIP payment, and then they need to work it out with the IRS to get that $1,400. They're not going to be able to reconcile it on this tax return without causing significant delays to them getting funded. I can tell you, I saw returns that had wrong EIP payments that just got funded in November that were filed in February. So if you want to wait 9 months to get paid, you know, that I guess that's your choice. I wouldn't do that. So, and that's where we're going to talk about the SATI system. So this is the secure access process for the IRS. Okay. And this is what the process they will go through to verify their identity so that they can have access to their IRS online account. So there's some instructions on where it goes here. So they'll go tools and applications on the IRS website, and then they can either open the CT Cup or the view your account information. They will open, will be able to open a secure account via ID.me. So they'll click the create account button. They'll complete the ID proofing authentication as part of the registration process. Then they will go back to the individual online account or the CT Cup. After that, they'll always have access via ID.me. Okay. This is what they are going to need to be able to authenticate themselves and verify their identity through ID.me. Okay. They're going to need a picture ID, driver's license, passport preferably, a cell phone with the ability to take a photo and upload, another piece of evidence to prove who they are, car registration, bank statements, utility bills, things like that. Now, depending on the evidence type, they may need to provide at least 2 or 3 forms of evidence, okay? And they will need an email address. And I will explain sort of how this authentication process works, okay? So what they'll do is they will upload their ID. They will take a picture of their photo ID. They will upload that. Then they will take a selfie, a picture of themselves, and then upload that. The IRS will use facial recognition software to determine if the identity matches, right? If the person in the picture is the same as the person on the ID. If they don't match, they're going to have a problem. If they do match, then they will ask for utility bills or bank statements or something like that to further authenticate the ID. Once they have that, then they're able to access everything in the CT Cup or the IRS online accounts, including those 2 things that you need, the advanced child tax credit payments and the recovery rebate credit amounts. I would encourage you to encourage your clients to do this now. Go get logged in. And I will tell you this, if they are doing an advance, I would not do an advance, a pre-ac advance or an in-season advance without that information there. Without them physically having the letter or giving you screenshots, whatever, from the IRS online account that shows the exact amounts. You do not want to guess or trust their instincts on this, because again, no matter what you tell them, if they don't see their refund in 6 weeks or less, it's your fault. If they don't get their refund until October, it's your fault. And that's not good for business. Okay. So the 1040X. So there's been a couple of changes and one clarification on amendments. Okay. Beginning this filing season, the following amended returns can be electronically filed. You can now electronically file the 1040X if the original return was paper filed, or if they are making a filing status change. Previously, those 2 things were paper filed only. So the system's been updated to allow those to be electronically filed so that you don't have to paper file it in those two circumstances. Additionally, we got a clarification, and that is any refund that is associated with an amended return. So for example, if on the original return, they got $1,000 refund, and when you did the amendment, that went to $3,000, any amount that's associated to a refund on an amended return will come via check. It will not come via direct deposit. It will always come via paper check. We are in the process, or the IRS is rather, of investigating or determining whether it's possible for them to do the direct deposits for tax year 2022, but for 2021 and prior years, it is going to be a paper check. So the COVID-19 or disaster-related withdrawal from the retirement accounts. We had quite a few questions about this last year. Form 8915E. So essentially what the IRS did, well, what Congress did, I gotta stop putting it on the IRS. What Congress did was allow taxpayers to withdraw money from their retirement account if it was related to COVID-19 or another federally declared disaster. In those instances in which they withdrew money, they were not subject to penalty, to an early withdrawal penalty, and they could elect to have the amount withdrawn taxed over 3 years. So if I took out $30,000, I could have $10,000 taxed in 2020, $10,000 in 2021, and $10,000 in 2022. Okay, that was reported to Form 8915E on the 2020 return, which taxed the first 1/3 of the withdrawal. Right? For 2021, they are going to tax the second 1/3. And then in 2022, they'll tax the final 1/3. Okay. To find the amount, so you'll have to reconcile this on Form 8915F. Okay. And what you need to know is the amount being, or to find out the amount that's being taxed each of the 3 years. You want to look at their 2020 return and Form 8915E. It's either going to be on line 9 or line 17, depending on what kind of withdrawal it was. Okay. So Form 7202. So we got to get some clarification here. Okay. Self-employed credit for sick and family leave. So the American Rescue Plan made the following changes to these credits, or this credit, if you will, for the 7202. Okay. It extended the credit through September 30th of 2021. They reset the 10-day maximum for sick leave starting 4/1/2021. So the original 10-day limit applied from 4/1 of 2020 through March 31st of 2021. And they increased the number of days the family leave credit may be claimed to 60. That means the maximum credit is now 12,000. So I want to revisit the details of the credit so that everyone kind of understands what it is. So sick leave. Self-employed individuals may claim up to 10 days of sick leave if they were unable to perform their services due to COVID-19, or the individual is caring for an individual because of COVID-19. So the sick leave applies to self-employed taxpayers who got COVID themselves, or they were caring for someone who had COVID. And depending on which one it is, changes the credit amount, right? The credit amount for themselves having COVID was $511 a day. When it was other people, it was $200 a day. Okay. This is the other one as far, so moving, I guess, ahead, right? That's the sick leave. The family leave piece of this credit it states that self-employed individuals may claim up to 60 days if they were unable to perform their services because of certain COVID-related care they provided for a son or daughter under the age of 18, whose school or place of care was closed for reasons related to COVID-19. And that's the most important piece. Whose school or place of care was closed for COVID-related reasons. Okay. I know, at least in my county or in my school district, in 2021, the kids were given an option or parents were given an option. They could either attend school in person or they could attend remotely. So here's the kicker to that. Those people would not be able to then claim this 60-day credit because the school was open. It was not closed. They were not forced to stay home. They made a choice. When you make a choice, that disqualifies you from this credit, okay? And that's something that you have to keep in mind, that this only applies if the schools were closed or their daycare was closed because of COVID, okay? You should not have a bunch of people who are likely to qualify for the full 60 days in this, because most of the schools were open in 2021. There just wasn't a lot that worked. So you may, but you want to check and make sure that they actually qualify. Now, the credit amount for that is $2,000 a day. Okay. Couple of other changes that are on the.
Kevin, I'm
Yes.
so sorry. Before you move forward, are you able to show the form and
Sure.
so they could see what it looks like and how to fill it out?
And I also have a question, Anna.
Go ahead.
We want to make sure that if this is just one time, it's just one opportunity for tax payer to claim this credit. For example, if we, like a client claimed that credit last year, would the client be able to claim it this year as well?
Only for January 1st through March 31st. So it's kind of tricky, but the dates reset, right? So the credit reset itself to go from, and that's what I was talking about here, and I'll go back to it real quick, right? They reset the credit for 2021, right? They reset the maximum sick leave starting at 4/1 of 2021. So they can only claim this for a short amount of time legitimately, because the sick leave did not reset. Or I'm sorry, the sick leave did. There's sort of has the IRS not updated this? It does not appear so. Yes, they extended it, but it only applies for, yeah, that's right, January through March of 2021. It wasn't extended beyond that. It was 2021. At least that's what the form is saying, right? January 1st through March 31st, 2021 only. That's it for 7202. So it reset. So they have a window of time. But like I said, the credit for the sick leave in particular, they would have had to have been sick for the maximum of 10 days or taking care of someone who was sick with COVID, maximum of 10 days from January 1st through March 31st of 2021. As far as.
Can you do this form? Go back up, Kevin, real
I
quick.
have a question.
Can you go ahead?
So do you need proof that they were sick those days from January through March, as an example?
I would get proof. And the reason for that is you're doing the return, so the IRS is going to come to you. And if you don't have documentation of some kind from that taxpayer that's saying that they were sick, then it comes to your word versus their word.
Okay. And would
Right.
that be like,
And that's never where you want to be.
would you need like the COVID results showing that they were sick those number of days?
For the family to hear.
I mean, if they have a positive COVID test, that helps.
Okay.
You know, at least something, or even an affidavit, even if you get them to sign something that says, yes, I had COVID for this day. Yes, I was not able to take my child because their daycare was closed for these 60 days, right? Something. You've got to have something, because look, this is the general rule on tax preparation. And I think Anna can attest to this. If they can't prove it to you, you can't prove it to the IRS.
Correct. So if the school is open and their dependent, as an example, got COVID and they were not allowed to go back to school during the quarantine time or whatever that may. So we either need proof that the school sent them home, or they sent an affidavit stating their child did not attend school due to them having COVID, correct?
Well, that would, they would if it was their child, they would get the sick leave credit, right? If their dependent got COVID. The family leave credit that we're talking about in this bottom section here is if their school was closed because of COVID, which means whether they had COVID or didn't have COVID, they could not go to school or they could not go to the daycare. That's where the 60-day window comes in. For the circumstance in which you outlined, right, we're talking about them having COVID. And if we go back and look at the rules here, right, they can claim up to 10 days of sick leave if they were caring for themselves or someone else.
Okay.
Right. So those are two sort of different things as far as that goes. That's why I said in Texas anyway, you're gonna have a hard time finding any schools that weren't open in January.
So Kevin, let me put a scenario like this, okay? And I'm saying this because I want to make sure a lot of people understand. So I get this client and their child had COVID, couldn't go to daycare, and like she said, they do an affidavit. Hey, my child had COVID, so therefore I had to stay. Blah blah blah. So I'm gonna go into this part of the form. I'm gonna put 10 days. I see you typing, and then what? What do I do here? So they can understand what to do in there. So I'm gonna put 10 days there, and then what else I need to fill out on there to get them to have this credit. And guys, keep in mind, you can only do this form if a person has a Schedule C, because this is only for business owners.
Right. Yeah. And here's the other side, and you got to kind of be careful in here when you're doing these things. I don't
Also, what you're doing that, Kevin, and the other reason why Kevin emphasizing to make sure you have some type of proof for your client is because the IRS is going to treat this form just like the Schedule C. What happens is if the client get audited and the IRS requires proof, the client can come back and say, I didn't tell her to do that. She just assumed and did it to give me that credit. I did not tell her to put this information. So at that point, that proof that you have is what's going to cover you, so the IRS don't come back and penalize you.
Yes.
You will have the proof that the client did give you that information.
Correct. Look.
And it happens a lot. That's why we make sure we emphasize this.
Yeah, I have been doing customer service, customer support, technical support for over 20 years now. And I will tell you the first thing I learned, and the first rule of dealing with any customer is that customers lie. They don't always do it intentionally, right? But they may omit facts that are relevant and important. And in some cases, especially I've seen on the tax preparer side, they will just lie to cover themselves, right? They'll tell you, oh yeah, I had COVID. I was out for 3 weeks. And then when the IRS comes back, it goes, okay, show us that test. Oh, I never told them that. We see that all the time. It's one of the reasons we talked about the file options earlier, right? That's why I like printing that form and making them sign, because they can't come back to you then and say, oh, I never told you that. I didn't agree to that. I didn't agree to these fees. I didn't agree to get it from the bank, whatever the case is. Yes, you did. You signed it and you initialed what you wanted. Again, when it comes to these kinds of things, along with EIC, had a household child tax credit, education credit, it's really about protecting you. You have to protect the business first and then the taxpayer. It's unfortunate that it has to be that way, but that's the way it has to be. So to answer your question, Anna, you're going to enter the amounts, the days, in either lines 1 or lines 2, depending on which one it is.
Okay, so line 1 is for
Yourself.
myself, and line 2 if it's that I care for my child.
Right. Now, this is a key thing. It is a maximum credit of 200. That doesn't mean that you will get 200. And I'll use this as a prime example. I had very low income on my Schedule C, right? Very low. I had $3,500. That was.
Let's put a big amount just for the sake to see on the top, on the gross, just for the sake to see like what happened. Because I know it only really works for people who has a higher income.
Right. So if we go look at that 7202 now, it's calculating out, right? the
Mhm.
10 days. I only got 120 days because it's, again, I'm getting 162 per day.
Okay, that's where I
If-
see how much I'm getting per day.
Right. If this was, let's say 125,000. Right.
I have one more question, a clarification rather. So I'm self-employed as an example, and I had to stay home to care for my child. So I get credit for 1 and 2, or just for caring for my child?
You get a credit for maximum of 10 days. It doesn't matter if it's you or them.
Okay,
Right. You see, I did 10 and 10. It doesn't change.
So that
So
means,
in your particular case, right, if you and a dependent had COVID,
yeah, I was
I
gonna
would
say,
go with you because the
Okay.
maximum credit amount is 500
okay,
for you, right? And
Got
you
it.
see, I put it all the way up to 125,000, which leaves me at 118,000 in net earnings, right? So it's 456 a day. If I change this to a dependent, still calculating 4,000, but it should come out to 2,000 because it's showing the cap right here. Enter the smaller of line 11 or 200. So that's what the calculated a rate is per day, right? Which is basically just taking your income and dividing it in the ways that it needs to. But when it's another dependent, then line 12 comes in and you get 2,000, which is $200 a day for 10 days.
so if
right.
you and your child got COVID, which happens a lot, then in that case, go ahead and just go with yourself.
Yeah, because
You get more money if you
it's
claim
4,500.
versus,
It's up to 511 for you. It's capped out at
Okay.
200 for any dependents. So yeah,
Okay.
in that particular case, you want to use that function. Now we go down into the bottom section here where we're talking about. So there's actually two sort of sections, and that's why I'm glad you brought up this form, Anna. Part 1 covers January 1st through March 31st, right? Because remember what we said right here. They extended it from April 1st. So they've got to separate it because it's 2 different bills. So if we go look at the form, so here's credit leave for January 1st through March 31st. Let's just say I got COVID in January, right? I was out for 10 days. And then I got COVID again in August, and I was out for another 10 days. I get it twice. Because this part 2 here, so here's part 1. Why does that say part 2, part 2? That's weird. That shouldn't say part 2, part 2. That should say part 3. So part 1 is for January through March, right? For the sick leave, or for sick leave. Part 2 is family leave, January through March 31st. Then part 3, this should be part 3. I don't know why it says part 2, is April 1st through September. So it's 2 separate things. So you guys want to pay attention to that because the dates that they were out determines where this will go.
Okay, that makes sense. So,
So
I
let's
wanted-
say we ended up out 60 here, then it would cap me out at 12,000 because that's what the cap is. So yeah, again, I think you're gonna have a hard time in Texas anyway, finding schools that weren't open.
and the family leave, Kevin, just so they hit that again, that it's only if the school was closed, because if you trying to get credit for COVID itself, it's only in part 1.
Right.
Okay.
Yeah, part 2, the family leave only applies essentially if you had to be home to take care of your kid because they couldn't go to school.
Yeah.
Because the school was closed. And that's why I said it's going to be really difficult in Texas anyway to find that circumstance because most of the schools here open for the 2021 school year at least by January of 2021. So you have a hard time finding that here.
Yeah. Those of you who have clients from California, which I know there's like
Right.
in New York, those are the only 2 states I could think of that was hit really hard. You want to make sure you ask this question for family leaves because more than likely they could benefit from that part.
Yeah, and the most important question to ask was the school closed or did they do distance learning? Or did they have an option? right? Because if they had an option for distance learning, which is what we had here in Sci-Fair, right? We had in-school learning or remote learning. You had a choice as a parent which one your child was going to do. Now, if you have a choice and you chose to keep your kid home, the government's not giving you credit for that.
And that's why I wanted clarification. So if the school was open, but their dependent had COVID and could not go to school because the dependent was positive for COVID and had to be quarantined, do they qualify for the credit?
They qualify for the sick leave. That's two different
Yes.
things.
Okay.
Yeah, two separate things. They would
Okay.
qualify for sick leave up to 10 days, right?
Okay, now I
Part
understand.
one, Mama, which is part
Alright.
one. So
Right.
you
Part
would do
one,
part one. Yeah.
Part one or part three, depending on when they got COVID, right?
Okay.
And that's the other most important piece, because they go, well, I got COVID this year. And you're like, okay, great. Were you unable to work? And if they say yes, you go, okay, how many days? They tell you, oh, I was unable to work for about 6 days. Okay, great. When? Right? What was the dates of that? When did you first get sick? Do you have a COVID test? Like, can you give me any documentation that shows that? Because and this is the key piece to this. It's amazing if you word things the right way, how helpful people suddenly become. Right. And this is a prime example, because you say, hey, if you can get me documentation, I might be able to get you a credit to recover some of the money you lost on those days because you weren't able to work because you had COVID. Watch how quickly people suddenly come up with COVID tests from 9 months ago that they didn't know they had. People will come up with the documentation you need when you tell them that it might get them more money. Right? Like, that's just generally how that works. And Anna can tell you.
Yep.
All right, so a couple of changes to Form 1040, because I want to run through this real quick so we can all finish our day. Charitable contributions for non-itemizers, that was moved to line 12B. It was 10B before. There was some wording changes on line 19 about child tax credit and credit for other dependent. Yeah, we've already saw this on line 27, the non-taxable combat pay election, the prior year earned income election. I showed you guys that earlier. There's a checkbox on the earned income for particular dependents or particular taxpayers that did not reach 18 or 19 before, but they satisfied all the other requirements for claiming EIC. Again, a checkbox that probably no one in here is ever going to check. They had to change the wording on the refundable child tax credit line 28. I showed you guys these schedules earlier. I'm not going to spend very much time pointing out these things. You guys know. I will point out the two things that you need to know. One is Schedule 2, the line for additional tax. It's line 19 for additional tax from Form 8812 for those taxpayers who receive more advanced payments than their calculated child tax credit. So it's the payback of the advanced child tax credit, which only applies to people who didn't meet those safe harbor requirements. So again, very minimal number of people, if any at all. And then on Schedule 3, I showed you guys line 13G is where the refundable child and dependent care expenses are at. Okay. That is it. So I said there wasn't a lot of changes. There were just a couple of really big ones that are really going to impact your taxpayer refunds. So does anybody have any questions about anything we covered today? I am exceptional.
You are.
You are, Kevin, but don't you think we'll have questions? And
Probably.
we will call you.
Sure. I mean, that's what support is for. Just know this. When it comes to support, there's a fine line between what we can and can't say. If you start getting into tax theory, that's where it gets kind of murky. If you're asking about technical things in the software, for example, if you're asking, I can tell you this, if you ask support how to fill out this form, they can't tell you. That's a hard line no from the IRS on that stuff. Now, if you're asking them, where do I put in the number of days? That I can tell you. Does that make sense?
So let me jump into this. So guys, we wear multiple hats, okay? So what just to add to what Kevin is saying, by law, in the technical part, in the software support part, they are not allowed to tell you, like he said, how to fill out the form or answer tax questions, right? Right now, Kevin, we're in the hats of doing the training for me, right?
Right.
But once he put the hat to do the technical support, he can answer these questions, but that's where me and Janet comes in. So let's say you once you get to this point when you have a client and you forget everything Kevin showed you today, then you call Janet or myself, and we'll be happy to do a join me where we'll log in into your computer and kind of walk you through it on how to do it. Because I know after 1 or 2 times, you're going to know how to do it. So you're still going to get that support. So that's why it's important that you have that sheet with all the contact numbers. So when you do need help, you have access to who to call for that particular help that you need.
Yeah, exactly. And we will tell you on the support end, hey, I'm sorry, this is a tax advice question. We're not able to assist on those. And if you get that response from support, from anybody in support, whether it's me or any of the other people in support,
Yeah.
call Anna.
Yeah.
At that point, that's our polite way of telling you, hey, I can't answer this, but you know who you can call to get this answered.
And keep in mind that by law, that's how it is with every software in the United States. We just happen to give that additional service as a courtesy to our client to create this other department where you have the option to call Johnny or myself to help you with that.
Right. Yeah. There's a separation and a disconnect between what support does and what Anna and Janet are able to do for you. And it's intentionally done so that we can stay compliant with the IRS on this stuff.
Okay, anybody has any other question before we're done? I guess not. Are we done, Kevin?
I'm done. I have nothing else.
Okay, so since Kevin's done, again, for my business owners, make sure that you log into the second link at 1 o'clock. Again, we are not going to cover the tax return part, but we are going to cover things that is related to you as a business owner, things that you need to know. And we're also going to do, again, the new law, the continuing education. So you'll be able to kind of ask more questions. And the great thing is, if you want to take this again, will be great, because there will be people on the second class with a lot of experience that will ask some great questions that you could actually learn from. So make sure you do stay for the continuing education for the second class as well. And we'll be sending you a copy of this training. We're going to email it to you. So like that, you'll be able to watch it again, either by yourself or with your employees. So you could just review what you learned today. One last thing, make sure to give us a call. Actually text us and let us know when you're going to be available any day before Wednesday. So Johnny and myself be able to set up an appointment to do a one-on-one with you. That's it. Well, Kevin, we're done. You guys, thank you again for participating and your patience and all of your great questions. And we'll see you later.